Hello and good evening to everybody who's joined us today. Thank you very much for taking time to join our webinar, Scaling the Cloud, the Hyper Evolution of Data Centers. My name is Eric Maribojic. I'm the Director for the Center for Real Estate Entrepreneurship at the George Mason School of Business. For those of you that don't know us, the Center is George Mason's platform for real estate education and a forum for important relevant topics around real estate development and the built environment. The School of Business is a school where we encourage learners at any stage of their careers or of their lives to come and develop, and where we promote business as a positive force in the world. Before we proceed, I'd like to thank the members of our center's advisory board. These are the leading companies and organizations in our area that support George Mason's thrust on real estate education and who provide the guidance and critical financial support for us to be able to produce and present programs like the one we're having this evening. If you are interested in supporting real estate education at George Mason University, please drop me an email at the email on the screen, or just respond to some of the emails that you've gotten from us for this event. And now I'd like to introduce our featured speaker for this evening. Northern Virginia has become a leading center in the global data center industry, as more of the data transmission, processing, and storage needs have grown exponentially. Ever larger and more sophisticated data centers have grown in Loudoun County and beyond, affecting land use patterns in our area and land prices. Related businesses have followed, expanding our region's technology ecosystem and our real estate tenant base. What does the future hold for data centers as the world's generation and use of data evolves? Tonight, we will learn about the leading technologies and industry trends that shape Northern Virginia's data centers and impact our economy. Our featured speaker this evening is Dan Madrigal. He is Microsoft's Global Head of Data Centers Mergers and Acquisitions, Cloud Operations, and Innovation. He also acts as the company's regional head for America's data center co-location and wholesale data center lease strategy. He was formerly Facebook's head of data center real estate acquisitions and strategy, and prior to that, he was chief real estate officer for America's real estate operations with Equinix, the largest publicly traded data center real estate investment trust. So without further ado, I'll turn it over to Dan. Just 2 points. If you have any questions, please put them on the Q&A feature below, and we will get to the questions after the presentation. This program is also being recorded, and a link to the recording will be sent to all registrants. So I will stop share now and turn the screen over to our speaker, Dan Madrigal.
Thanks, Eric, and give me a moment here. Good afternoon, everyone, and thanks for joining this webinar to listen some of the trends regarding data center, growth and evolution. A lot of participants here. Nice to see some familiar names and in the roster. So anyway, looking forward to sharing some of my use cases that I've had, and I have a number of topics to go over, and this will be general topics to go through, and it will be parts of it would be worthy to go deeper on, but we probably don't have enough time to do so. And so hopefully this will give you a good flavor of how the market is doing and how we're thinking about it in terms of its growth and progress. So with that, just a little bit more about me, and thank you, Eric, for the intro. I've been in the data center industry for about 13 years now, and the bulk of my experience actually has been real estate development. and by happenstance landed in the data center industry when I was asked to lead a development in Tokyo, Japan, for a data center build, primarily leveraging my expertise as an architect and real estate professional. But then I never left the sector, and I'm actually super excited to be part of the sector, and it has grown tremendously in the last 13 years, and especially in the last 5 years as well, given the growth in cloud that some of you have probably seen and felt all over, and not the least of which in Northern Virginia. So with that, probably this is not a surprise. You've seen some of these charts before. Or in January, a year ago, the digital world has been in the billions, and its penetration is really incredible, with the use of between internet users and cell phones, um, and of course social media from my former company, in terms of use, and we all live it, right, in terms of our own daily lives that we have solely dependent on the digital world, so much so that in the light of the pandemic, data center professionals and operators have been deemed essential workers to keep the connectivity up. And so that has been a super important trend and impact on the pandemic. And even just come the beginning of the pandemic, there was a surge of spending more time with your devices, and I'm sure this is not a surprise to anyone. And actually, I would argue that since April of last year, that these numbers are probably now understated, given the lockdowns of 9 or plus more months, and we're still not out of the woods in terms of our dealing with the current crisis. So yeah, even if you say that 76% is on mobile smartphone, those of you who have children can attest that they're probably 90% on the phone, if not more, and the like on other items, especially when it comes to streaming, gaming, to name two subsectors that are actually have increased in a lot in the last year. So another cut of the data but not so much by demographic, but by gender, and it's similar to the one before. And again, this data is already 9 months old, and we've seen, and even us in Microsoft have seen a tremendous amount of growth in the use of our Teams platform, our gaming consoles through Xbox, or even just the engagement in LinkedIn, in our social network professional social network platform. So again, this should not be a surprise, but what it does show is that because of this type of engagement, of course, it's not a surprise that the engagement and use of digital technology has increased tremendously, and for those of us who had to entertain ourselves through streaming, and this is again not a surprise from 2019 through 2020, on the exponential growth on just one subset of streaming subscribers. I know I, for one, who used to be on a plane every week, I watched all my movies in flight, and now that travel is essentially gone. I'm doing all of my entertainment obviously through streaming. So again, not a surprise for anyone, but when you start to think about the use case, and this is only one, I mentioned gaming earlier, and not to mention the workplace itself. It is clearly a digital world, right? And this is an animation of a 24-hour period of the internet use globally. And this data was actually collected on average, 8 months ago. And equally, I would argue that this probably has lit up even more in the last year. It's just nice to see it graphically on how it explodes in terms of use, and obviously in all continents for our needs. So when you think about just the data center storage, these are some forecasts that have been done by others, and I think you'd be when you look at other industries that have been declining because of the pandemic. Again, it's not a surprise that this sector is continuing to grow in 27% in on CAGR basis, and it's really astonishing when you think about that kind of growth against almost any industry. There's some anecdotal, well, actually not anecdotal, but there was some data set that was put out that when you saw the the travel and hospitality industry decline in 2020, there were two industries that was increasing on the opposite. One was the data center services, and the second one, which was kind of funny, was pizza delivery. So you sort of have, depending on what we need, data and food growing tremendously in 2020. Obviously, but with travel being curtailed severely, the hospitality group has been suffering. So it's really not a surprise that the growth is tremendous, but also it points out that some players who are already strong become stronger, and you don't have to look too far with some of the stock price increases from the lows back in March and April among the tech companies, and they have now surpassed that and now reached new highs because of the demand of digital services. Again, nothing, not a surprise to anyone, but this type of growth, and just in North America for 30% growth is pretty incredible. And again, on the server side, when you look at the install base, in the last 5 years, a low to mid-teens growth in servers and data center storage was considered already a lot, and now we're seeing mid to high 20s in growth, even more. It's actually pretty incredible in terms of this industry. And from a regional perspective, the bulk of the growth is coming from North America, but as you can see on the chart, between APAC and Western Europe, it continues to grow exponentially because of the connectivity needs that is required for our sector. So again, the charts are pre-pandemic, and this has now surged even more. And I'm sure when we look back, we'll even be more surprised. So as you look forward to where are these data centers and the growth that you're seeing just on the actual types of data centers, it still continues to be exponential. So what you're seeing in this chart here is really the growth on a subset of data centers, which is called the edge, which is usually closer to the user population as their applications are requiring more efficient latency. And even just on the subset of edge data centers, and they're generally smaller footprints, even that alone is continuing to grow. So the broader point is that the pie continues to to grow globally, and there's no there's no curtailment in sight, just because of, again, of our needs of connectivity, even more so now. Um, and I guess for some folks, I know a lot of you on the call are familiar or close to familiar with this industry. Um, we know that the cloud has to sit somewhere, because all the data that we store through our devices or operate are actually, they require physical servers and therefore sit in physical space. So if everybody asked me before where the cloud is, I would always say it's in Northern Virginia. And this chart actually is pretty indicative of that. We're in the availability of the total megawatts. I mean, Northern Virginia is a clear leader, with Tokyo being the second, and in Northern Virginia is still 50% more than the next biggest city in terms of data center capacity in the marketplace. And you can look at the chart on down the line. um, the top 10 or 11 or so are your major cities where are the most populous. And so even Silicon Valley is, number 5, below Northern Virginia. And I know it was probably unthinkable even 5 years ago that we would be exceeding 1 gigawatt just on the megawatt powers in Northern Virginia. And now we've exceeded it, and there's more on the way, right? And you look at the active development, even if it's already beyond a gig in Northern Virginia, there's another 300 plus in the pipeline that are being developed. And I know, seeing some of the names on the call, I know some of you are very close to managing this development, especially in the likes of Loudoun County, and other adjacent counties from Loudoun that are continuing to catch up. But what it also shows is that the other cities are continuing to add capacity, and when you start to tease out, tier 1 cities are obvious, the likes of, uh, again, Northern Virginia, Silicon Valley, or even Dallas for that matter, in Chicago. But at the same time, the flap markets of Europe, of Frankfurt, London, Amsterdam, and Paris, and also Dublin, are continuing to grow. But then you look at this chart, all the secondary and tertiary cities are equally developing properties for data center use. And the likes of, the top 5 tech companies, including like ourselves, like Microsoft and Amazon, are big, market share holders of absorbing capacity in some of those key markets. And I think we will continue to solve for its growth as we need to, because the demand is there, in every way, shape, or form. Well, before I go there, it's been said, and some of you have read reports, that there are, going back to the hyperscale data centers, there are about, maybe 500 or so hyperscale data centers in the world, out of the maybe 5,000 for all of data centers globally. And there have been reports wherein just the hyperscalers alone of 500 or so, that will grow 9 or 10 times over the next 7 to 10 years. Now, even if you argue that that's a wrong forecast, even if you said it's only half that, it's still a lot of data centers to, we need people to actually plan, design, build, and operate these centers. right? And so what I love about this industry is its relevance, and its relevance is related to its growth. And that is continuing to grow tremendously. And I've seen it in my former employers and our competitors in terms of how we're planning for growth. And every quarter that's reported by some of the public real estate companies, I think it's pretty clear that the absorption and development continues to grow. So I think from a demand standpoint, I think Northern Virginia continues to be the leader, and that um, network effect, no pun intended, is actually fueling also its own uh, almost self-fulfilling prophecy to maintain that leadership. Now, in terms of topology, the simplified graphic, as some of you may have seen, I look at it that there are two components for it, right? One is there is certainly the compute portion, which is what we actually see in our devices, that speaks to the data queries between an internet exchange and the ISPs, as well as the carrier data centers. And all of that I label in sort of in the compute bucket, including edge, right? So that I know there are more expert, there are people on the call who are more experts about this than I. But what it does is really talks about the latency that's required to ensure that applications closer to the users have that latency efficiency in order to perform. So a good example is driver assist cars. And clearly the latency needs for that kind of application has to be, uh, in real time, otherwise it's catastrophic. Maybe less so if you're controlling your thermostat from your phone. But by the same token, that portion of the compute makes the data transient, and then eventually there's some data storage that needs to happen, and whether like recording this webinar, that data needs to sit somewhere, and for everyone to look at the recording later on, then it has to be archived. So, and again, between our use case for uh, again, my former company, we're in social media use on Facebook or Instagram, and all of, whether it's stories or whatnot, there are a lot of billions of photographs or videos are being viewed or stored every single day. And so like I said, that's why what I love about the industry. One, I have a job because of all of this demand, and that becomes and again, the relevance of it is really important. So just shifting gears on kind of valuation from a property standpoint, for those of you who are real estate professionals, I think from a valuation standpoint, it doesn't really change the approach, right? And the typical valuation of properties are the same, whether it's a replacement cost versus a transaction comparable, or versus a DCF that you would do in order to value the asset. And that really hasn't changed. Well, I think what's different is that since this is such a new asset class, people don't know how to really value it. And when you look at sort of in the grand scheme of things on data centers as REITs, this asset class of real estate investment trust, thinking about the total US commercial market, it's about a 20 trillion value. And the subset of that, which is only 2%, is the data center business. data center assets. And then the data center REITs are 75 million of even a fraction of that portfolio. But what's interesting is that the growth of this asset class, although it's still nascent, right? And it's really just mushroomed over the last kind of 15 years. That growth, as you saw in the earlier slides, are just exponential. And so I think it's not a surprise that in 2019, $500 billion of private equity money was raised to support, to be deployed in infrastructure funds, data centers included. So 500 billion was raised, right, in 2019 alone. And I know there are people on the call who are in private equity, and I was one of those people. We're in, there's a lot of, sometimes we call, dry powder, or even silly money out there trying to be deployed in this asset class. But it is a different asset class. When you look at, going back to sort of the valuation, the cost to build, it's about $1,000 to $1,200 a square foot, right? So even if it's less than that, or maybe that's the trading of how people are trying to buy these types of assets, it is a lot more than your typical logistics shell or an apartment building or an office building. And so I think what we've found is that there's still not a lot of people who are seasoned enough in this industry to actually value this properly. There are not a lot of comps out there because they don't trade too much. And when they trade, sometimes they trade as a matter of buying the entire business rather than just an asset. And sometimes it's a portfolio sale or a company buyout, and you see the trends on companies being absorbed by other larger companies in the last few years, and that continues to happen as people are trying to get into the industry. And yet there are numerous private equity companies continuing to try to get into this market. So that continues to be the trend. That's what we're seeing. And in terms of how it looks and its footprint, this is all Facebook public information that's been deployed that I worked on personally. And I think if in larger cities and dense populations, if it's within a city center, it's not a surprise. In the likes of Singapore, going through a more vertical type of deployment. Now, at the same time, when you have more land, the deployment is broader in terms of the acreage. So some of these sites are 200 acres plus, unlike the ones in Singapore, it's less than 50. But then it has a different cost structure to address. So even I think you see it for those of you who live in Northern Virginia, you drive by and you see some of these new facilities, and there's a lot of them, and kind of depending on the sort of footprint that they can buy in terms of land. And some of you have probably seen the increase in land prices in Northern Virginia, again, exponentially being more expensive now than before. There's only so much land that can go around. I'll show a quick video that was 5 years ago from Facebook on how they scaled these types of developments, and then I'll continue on. And I know there are questions coming up on the chat, but we'll pick it up at the end later.
working to create the world's most innovative, efficient communications infrastructure in just a few short years. We were growing so rapidly. There was a ton of pressure. I had hair before I started.
Around in the early years when we're first building our data center, it was the Wild West. We were just a couple of location facilities, a couple of megawatts worth of Linux-based power. Stuff was breaking all the time. We were running out of power. We were taxing all the electrical equipment. We said there has to be a better way. We needed to take control of our own destiny. We were virtually a team of software engineers building Facebook, designing infrastructure, these massive data centers, something that we had never done before. So we took the leap of faith, committed to making sure that it was going to work and that we weren't going to fail. We only had 2 years to bring up the first data center and make sure that we kept the lights on. We started off with our server designs, looked at a typical OEM server and ripped out a bunch of stuff.
You don't have to make it visually appealing. It just has to work and work really well.
We can put them together, take them apart and assemble them, and we're able to not have to rebuild an entire server every time we need to upgrade the rack. That's a significant gain for us. We really want to be able to have an infrastructure that can adjust and morph itself over time.
When you design a data center, it has to be designed from inside out.
What we did is we got rid of the air conditioning system. We open up the windows on one side of the data center and we use fans to blow air in. We mix it with the warm air that's generated by the servers. And then whatever hot air that we don't need, we just exhaust up the other side of the building.
If you look at this power path coming from utility down to the chip level, there's a number of power conversions happening. And every time you do this conversion, there's a loss that I had to get rid of. Instead of a 27% loss, our loss is now 7%. It was a big move. No one has done this before.
We really focus on our PUE here because we want to run the most efficient data center we can.
Power utilization effectiveness.
PUE basically is the ratio of the amount of energy coming in and being used by the building divided by the amount of energy being used by the servers.
Today, our PUE is 1.07 compared to the industry average of 1.5. And that's huge.
This is an amazing accomplishment in 5 years, from breaking ground to your first data center to a company that has a humongous infrastructure footprint around the globe.
Our family of apps and services continue to grow. We see over 1 billion people using our platforms every month, and we have to continue to scale this infrastructure to help people connect.
There's nothing in this building that isn't built and designed by Facebook that we then uniquely also decided to open source and give away to the world.
From the earliest days of Facebook, this company and the culture and what we believe in has all been about openness. We created the Open Compute Project where we are sharing all of this innovation with the community in hopes that we all collectively can innovate faster.
We actually release the specs of our motherboard, schematics, everything on the Open Compute website.
I think we're doing something really unique. For the first time ever, we're building a platform that connects the entire globe. Everything we do is with this in mind, and it's an endeavor on an epic scale.
That video was more than 5 years ago, so that has actually changed, and it's if they have even more users now. But I guess it goes to point to here's one company just scaling up, and you can imagine all the other companies kind of doing the same with their own platforms. And I think inside of that, the realm of sustainability is equally important. Greenpeace actually tracks this pretty closely. Again, this report is maybe a few years old. There might be a new one coming out of this. In grading the data center companies in terms of their, as they say, clean energy index. And you can see that there are companies who have committed, and again, this data is old, so a lot of progress have been made with the likes of between Google, Facebook, Microsoft, and Amazon, you know, trying to also increase their clean energy footprint. And so when you start to think about the gap on the energy side in terms of clean energy that's renewable, or not renewable, I think there are companies that are being leaders about this. And in large part, one of the things that attracted me to move from Facebook to Microsoft was about a year ago. Actually, yeah, a year ago, they made an announcement to to not only be carbon neutral, but also be carbon negative at a certain point of time, and not only from this year moving forward, but also from the time that the company started. So it's a pretty ambitious goal, and there are plans publicly that you've heard on how we're going to go about that, and we have an awesome team who are trying to solve for that. But I think it's super important to demonstrate that leadership, that even though data centers consume a lot of power, that there's a lot of thought and deliberate actions with regards to renewable energy. And I guess last but not least, you know, when you think about the the, the timing of these things, you know, the leasing market has grown tremendously, in large part because it takes so long to actually build a data center from scratch. It can take from anywhere from 3 to 5 years, depending on the jurisdiction. And when you have massive growth of applications, like in our Azure platform for our business customers, you know, it can't wait 3 to 5 years. So leasing becomes that gap filler until such time we're able to build our own. Hence, what you've seen in the growth of the industry. I think that's all of my formal presentations. I'm going to turn it over back to Eric for to take some questions.
All right. Thank you, Dan. We'll start with some questions from the audience. So if you have a question that you'd like to ask Dan, just feel free to put it in the Q&A, and we will get through as many as we can this evening. So one question is, do you think data centers will continue to be the largest portion of Capex in the technology industry?
I think the short answer would be probably yes, because a good portion of it is construction, right? And then when you layer the server refreshes, which can anywhere be from 3 to 5 years, right? Depending on the company and how they think about that. Those two Capex categories drive a significant amount of spending. So I haven't had time to look at the data against the other technologies, but you know, there's a good likelihood that would be a yes, that will continue to be the largest portion.
There's a question regarding the facility in Singapore that you showed. That was a vertical facility. So some of the projects like you've shown in Virginia, like the one in Enrico County, was 200 acres, seems to have 1-story or 2-story buildings. And the one in Singapore was a vertical building. You know, does the economics of data centers in the U.S. Still not reached a point where we're going to see more vertical data center buildings in the United States and in Northern Virginia?
Yeah, I don't think it pencils out in the U.S. as much, and in large part because we have we have a lot of land. So compare that to a place like Singapore, which is a tiny country, or even even in the Western European continents. When I was doing site selection for Facebook, I mean, finding a couple of 100 acres in Europe is really hard, because they're more restrictive there, but also, you know, the change in zoning from agriculture to industrial is quite strict, and so and in part because they're, you know, using the land for food production, right? So the process is longer. Unlike, I think, here we have a lot more land, and I know there are jurisdictions that are pretty strict about this, and I've certainly seen it in the Commonwealth of Virginia. But at the same time, there are it's actually the economics, to the point of economics, it's actually cheaper to build one story with a mezzanine rather than a multi-story like the one that's shown in Singapore that's 13 stories. So I think the same adage is that as you get closer to city centers like New York metro areas or the Bay Area, you know, it lends itself to a multi-story type of deployment versus if you're in, you know, Texas or Illinois, that can allow for, maybe not Chicago, but outside of Chicago can allow for a single story. And even in Northern Virginia, you're starting to see a little bit different deployment, right? Some of, you don't see a lot of the multi-story yet, but there are restrictions and also on heights, from what I remember, in most of the counties in Northern Virginia. So there are puts and takes on how to deploy in terms of height, but the economics still favors single story.
Related to that question, you had mentioned about latency and the need for the data centers to be closer to the users. Does that change the format, the size of the data centers, as some of them need to be closer to what you call the core urban centers?
Yes, absolutely. And I think the financial industry is you know, very is known for this, right? Because if you're trading, that latency is super important to close the trade, to complete the trade. So anything that's when there's financial transactions, the data is so latency sensitive that you really need to be closer to the platforms and the users, you know, executing these trades. Now, if you're looking at somebody's, you know, family's photos, it doesn't really matter if it's a little bit more, it takes a little bit longer in order to look at the photograph, right? So I think it's all about the user experience and the applications, and companies decide where to place their servers in with that consideration to fully understand what is their use case. And so if the application is so super sensitive to latency, yeah, then they have to be closer, and therefore if it's in a closer city center, multi-story, generally a smaller footprint, you know, under the 10 to maybe 40 megawatts of deployment within a city center, as opposed to a couple of 100 megawatts outside of a city center. When you see those vast sprawling data centers, you know, those are sort of the spectrum of deployments that you will see, that you've seen actually already.
Okay. So one question is about, again, the localities. Are you seeing more pushback against data centers, for example, because of power issues, regardless of the progress being made in becoming more sustainable?
Yeah, I think you see massive pushback on one because it's almost lights out, right? So it doesn't create a lot of direct jobs, but it does create a lot of indirect jobs between the construction operations of the facility management and the like. And then there's the, the whole NIMBY approach of like, well, you're taking away power, you're taking away water, from our locality. So that's where you see the tension. And so it's really up to the companies to provide the right balance of engagement with the community of its benefits, right? Because otherwise, people will reject it. And I think last year you saw it in Amsterdam, wherein there was a massive growth of data centers. Suddenly there was a backlash, and there was a moratorium, and the moratorium was more related to power availability, really. And now the moratorium has been lifted, but then COVID happened, right? So I think communities will continue to struggle, wherein some of the development officials within the community would love to have a data center and a name brand, but at the same time, you can see some of the communities actually pushing back because they may not want it. So I think even though it's a clean industry, right, compared to industrial manufacturing, the use of power, and that's why I think companies are even more keen on maintaining a renewable strategy because of the importance of that balance.
We'll pick up another question. Do you see data center operators moving away faster from building their own data centers?
Data center operators? No, I think it's always a function of market demand, right? So and I don't think any of not necessarily the data center companies who rent space and power, I don't think they generally self-perform their construction anyway. So they outsource that to begin with. But I think it's more about satisfying the market share, right? So you need the product to sell the product. You need the capacity to sell capacity on space and power. So it's always tricky for data center companies on how much do I build. I don't want to build speculatively. I would rather build with an anchor tenant. It's the typical real estate dilemma, right? Do you build spec? And this is really expensive spec if you do that, or you build partially spec if you have an anchor tenant, right? So I think it's just magnified because of the costs to build these types of facilities, and it's a different risk curve, but it's still it's the same real estate sort of analysis and due diligence that people need to do and make business decisions against that.
Okay. Do you foresee any supply chain issues that may impact the data center industry?
I think we continue to see that, right? Because like I said earlier, if you think the 500 or so that exist today on the hyperscale side, and there are thousands more being built, I mean, it's pretty clear that long lead items like generators drive some of the schedule. And that becomes the longest pole in the tent to sort of wait for, well, it's 18 weeks for the generators to show up. So that's one example. And with COVID, actually, it continues to have a challenge on not only the materials, but the people building these things, right? When you have an infection cluster that happens in a job site, sometimes the job site shuts down, which they have to, right, because of the infection. And so it's not only a supply chain issue that you have to manage, and I think that's pretty solvable, but you start to see the delays, whether it's steel or electrical gear or cable or whatever. Those are challenges. But then the people side is equally important on all the workers you're trying to employ, the subs and their contractors and all of that. And you have some job sites have thousands of people, every day, right? In the light of the pandemic, how do you execute against that? And actually, I'm surprised that there aren't as much delays in the industry, but it's good as well that people have figured out a way to execute in light of challenging circumstances.
I guess just a clarification question on this one. You had mentioned hyperscale locations. How do those compare, or what's the difference between edge locations, which you also had previously said?
Yeah, and I think hyperscale is generic enough to the big, providers like Microsoft, Amazon, Facebook, Google, who are deploying large footprints, and that's what I meant by hyperscale. But edge locations are really smaller deployments to satisfy the application on latency sensitive deployments.
Where do you see are the biggest opportunities to make progress towards carbon reduction goals in your data center portfolios, or other people's data centers portfolios? Where are the biggest opportunities for carbon reduction?
Well, I think continuing to focus on the renewable energy side and sources, right? And the top ones are wind, solar, maybe to a lesser extent, kind of depending on where you are. But then there's also hydro, right, in terms of renewable energy. And I think personally, this is my personal view, that the more we focus on those types of projects, and the more counties or states or countries supporting that type of development, that provides the ability to offset the the use on fossil fuels. I think that's where the opportunities are, and you see more and more projects on that, and that's why some of the funds are focusing on renewable energy related projects for infra support, because this will continue to be, I think, top of mind, not only for our generation, but even the next generation, our children and our children's children, because it will be important to have really a sustainable path and not grow at all costs without that in mind. And I think you've seen the commitment now is with the top 5 tech companies we're in. They wouldn't do a project if there's no proper sustainable solution. And that used to be just like a nice thing to do. Now it's a must-have. And you can also see that from the data center providers increasing their commitments and trying to equal the carbon neutral focus in their footprints. So I think but there continues to be a lot of work, right? And I think, but we shouldn't let up in terms of ensuring that we make progress on this and make good in our commitments.
Is there a noticeable difference between how users like Microsoft and Facebook and owner developers and Reits manage data center projects?
Well, yes, because usually the latter group, they're designing it from a lowest common denominator, right? Because they're trying to lease it to a bunch of other people. And some of the other players, either it's self-use, but they can control their design more specifically. So even if Microsoft and AWS have their own customers, we have our own designs, right, and our own topology on how we do our setup in every locality. So it's a different problem set, and therefore the way people execute against that problem set will be different. And when you look at data center providers who have they're trying to lease it to other customers, their pressures are different and their designs will also be different, because think about it in the way that one's is more for multi-tenant versus single tenant, right? You design it a little bit differently, whatever the asset class, right? So it's similar for the data center world on how you think about the design and the execution. And so yeah, there are differences, and I think the challenge is we tend to use the same. You're drawing from the same pool of contractors or subcontractors, and that becomes the challenge on sort of the resourcing of all this, as I mentioned earlier, on how you resource to execute the construction, but also to operate. There's no really data center school, right? There's no data center degree per se. That maybe eventually it will come, and I don't have the answer for this, but it's a sector problem on how do you resource this properly. We end up poaching from one company to the other, moving from one tech company to another. I'm evidence of that, right? In terms of because there aren't enough people in this industry to satisfy some of this, a lot of this demand.
The development of new centers in Northern Virginia is increasingly becoming difficult due to land costs, land use politics, local regulatory costs, etc. Given this dynamic, what will be the main drivers of future site selection for data centers?
I think it's always a speed to market question. If people are able to offer the speed to market to almost anyone, that means resolving all the dynamics of what you need to make a data center buildable and developable and a land developable, right? And so when you think about it in those terms, does it have enough space, power, fiber, water, renewable energy, regulatory approvals, permits, air emissions, containment, and all of those things. I think site selection has to do with a lot more on the size, the scale, right? If you're saying, hey, I can offer you this data center, but it's only 10 megawatts, that will satisfy a different segment. If someone is saying, hey, I can have this, but I can offer you, that's different, right? So I think there will always be an offering, and the basis of companies are different from each other. But time has been an important currency. If you can buy time, or you can offer time savings in your projects, then that helps a lot for decision makers like myself on to deploy with someone or not, because there is a real speed to market requirement there in almost every project.
Okay. We are seeing some applications that are speculative in that they are not being filed by users. They are hoping to obtain approvals and then sell the project to users. Is this one step beyond your point of speculative data center builders?
No, to me,
or are you seeing that in the market?
No, to me that's speculative, right? If you don't have the generic definition of spec building is that you don't have a tenant, or you don't have a customer, so you're going at it at risk. Some companies have the ability to do that, but some don't, right? So, and I think from a risk management standpoint, if you're an investor, you'd want to mitigate that risk. So the more you have certainty with your customer base, the better for your investors. So to me, that's a spec building if you build it without having a customer or a buyer for the space.
Going back to your point about the workforce and education and the lack of talent, that's of particular interest, of course, to George Mason as a university. So do you feel that the workforce needed to build, run, operate, manage data centers, both for users and landlords. Is there a gap in the market, and what kind of skills are needed for educational institutions to step up and fill the gap, especially with this huge growth rate being projected, in the next couple of years?
Yeah, no, there's a gap in definitely in terms of skill sets. And the thing is, there is a unique experience here, right? There's one bit when you look for candidates that have, sophisticated private equity, investment banking, deal structuring experience as one skill set. In addition to that, have real estate transaction understanding and deep knowledge of how things are evaluated and how developments happen. And then finally, you layer the domain expertise of this sector, meaning, hey, I know I have experience and I know how long it takes to understand the construction makeup of this asset in terms of cabling, civil works, anything related to the physical infrastructure. That domain expertise becomes super important to have, right? And so when you layer just those three experiences of deal structuring, domain data center expertise, and real estate, it's not a common thing to have. Usually people have two or three, one or two. I mean, to have all three or more than that, it's just usually very unique. And so I think because this is a new industry or nascent, like I said earlier, people have gravitated towards the traditional, hey, I'll go to investment banking, but that may be in the healthcare sector, right? Or even in the real estate sector, but not understanding this sector on data centers puts them at a skill gap for that because they don't understand the asset. You see that in even the valuation when you try to get an appraisal for these types of assets, appraisals are all over the place. Right? For those of you who have had to do that for your own homes, can you imagine you disagree already with one appraisal versus another on a typical residential project? More so with this, the disparities are huge. And so I think the experience and the skill sets are so unique, and some people are afraid to go into this sector because then they become highly specialized that they can't get out. And maybe that's okay because of the growth of this sector, but I think there's that lack of familiarity, and there's not enough of a structural sort of, again, schooling or training for this. I think we've always got people from different industries that just happen to grow up in this industry. So I think there's an opportunity to shape something here in this sector, and maybe George Mason will be able to start to craft a program, especially where you guys are.
Well, with that, we certainly look forward to playing that role as our Northern Virginia economy changes. But with that, I'd like to thank Dan for joining us this evening and sharing his expertise and his experience with us on scaling the cloud, the evolution of data centers, which is such a big part of our Northern Virginia economy. So thank you, Dan.
Thanks for having me, and thanks for everyone joining and listening to what I had to say. Appreciate it.
Just a few announcements. One is we are now accepting applications for our fall 2021 class in our Masters in Real Estate Development program. And finally, we have an upcoming webinar on February 25th called Visualizing Real Estate Data for Effective Decisions with the Deputy Chief Economist of Freddie Mac. So please send me an email if you'd like to join us for that event. And with that, thank you everybody for joining us this evening. Again, we will send a link to the recording of this program, and thank you for participating in a real estate education program here at George Mason University. Thank you, everybody. Good night.
Thank you.